There is no doubt that institutional investors are buying Bitcoin. From hedge funds to mutual funds and VC firms, these money men are stacking sats at an increasing rate. However, there is one development that has me even more bullish than this. So bullish, in fact, that I'm willing to wager it starts a new Bitcoin adoption trend. I am, of course, talking about the recent moves by large corporates to allocate Bitcoin holdings to their balance sheets. I'm Guy, the crypto guy, and in this video I'm going to be taking an in-depth look at some of these aforementioned moves. I'll analyze what this could mean for Bitcoin and its price as we head into the new year. You definitely don't want to miss that, folks. So, grab some snacks, secure your sats, sit back and relax. Quickly need to cross some T's and dot some I's. Firstly, although I am a crypto guy, I am not a financial advisor. This means that everything that I say should only be used as a supplementary educational resource. Secondly, I'd like to take this time to welcome anyone new to the channel. Over here at the Bureau, I cover everything you just have to know. From deep educational overviews to unique coin reviews and everything in between. So, if that's something that you could get value from, then I highly encourage you to hit up that subscribe button. You may also want to turn on all those notifications to make sure you don't miss a single video. And finally, I really value your time. So, I have placed all of these timestamps right over here. So, feel free to make like House of Pain and jump around to those sections that most interest you. Okay, enough pitter-patter, let's crack on. Unless you've been living under a rock for the past few weeks, you would have heard the news that Microstrategy had purchased almost $425 million in Bitcoin. This was after they sold off their US Treasury balance, and it effectively means that they have over 90% of their balance sheet in Bitcoin. Now, there are a number of other reasons as to why this was so damn revolutionary. Firstly, it was the first US-listed company that held Bitcoin on its balance sheet. But more importantly, it was a company that had nothing really to do with Bitcoin. You see, one could easily expect a crypto mining company, exchange, or payment service provider to hold Bitcoin on their balance sheet as they use it in the course of their business. It's another thing entirely when a company buys Bitcoin because they want to make it part of their treasury strategy. An asset that they hold not only to protect the value of a deflating dollar, but also as an asset that can be used for international transaction settlement. This is exactly what MicroStrategy did. Indeed, it was seen as a weird move for a company that developed business intelligence software to invest in Bitcoin. But the CEO, Michael Saylor, makes a pretty damn compelling case. Firstly, and most obviously, you have that inflation that I was talking about. US Treasuries are currently paying next to nothing in interest. So, if you're holding these on your balance sheet, you're not really earning any sorts of returns. Moreover, as the Fed pumps more of that money into the system, it only has the effect of decreasing the purchasing power of the funds that are held on the balance sheet. This debases the value of the funds if the rate of return is less than the rate of inflation. To quote the CEO, Michael Saylor, "We just had the awful realization that we were sitting on top of a $500 million ice cube that's melting." Another compelling point that he made was that Bitcoin can effectively be used as a treasury asset. Think about the foreign currency needs of a large multinational. In order to be able to operate in all of these countries, they need to use the local currency. They need to have cash and cash equivalents on hand that are easy to convert and use in said countries. These fiat balances will have to be kept locked in local bank accounts of subsidiaries in order to transact on a daily basis and meet those expenses. The company's treasurer sits at group level and has to decide how best to allocate USD to these various foreign currency accounts in order to do business there. Of course, there are a number of inefficiencies and risks that come from this. Firstly, you have to convert that USD into the currency that's needed. We all know that banking fees are exorbitant. But when you're buying $1 million in an emerging market currency, it can be even more expensive. Also, it takes time for those funds to be converted. For anyone who has tried to do a SWIFT bank wire, these usually take anywhere from 3 to 5 days. But the biggest concern is probably the fact that foreign currency in a foreign bank account can easily be devalued and restricted. There are things called capital controls, where countries can effectively restrict companies from moving money out of the country. The CEO of Microstrategy gave a fascinating example of their experience in Argentina 10 years ago. The government over there basically restricted all of their Argentine pesos from being moved, and they devalued the Argentine peso overnight. The end result is that Microstrategy ended up losing over 90% of the value of their peso holdings. Of course, he does mention the option to move towards a gold standard for treasury management, but that is obviously far from optimal. Where is the gold going to be stored? Vaults in the country? Well, that opens it up to being seized. Moreover, moving and selling gold also takes a hell of a lot of time and is complicated. So, it's for this reason that very few, if any, companies will use gold as a cash and cash equivalents balance sheet asset. I encourage you to read the full interview with the CEO. It's quite illuminating to hear about his thought process and how it impacts their treasury strategy. It's all linked to below. So, it seems pretty damn compelling that a company would want to preserve its balance sheet in an asset that cannot only be deflated away, but is also useful in a treasury optimization strategy. What's really exciting about this, though, is that it has appeared to start a bit of a trend in the corporate space. Just last week, it was announced that Square, the payments company owned by Twitter's Jack Dorsey, had purchased $50 million worth of Bitcoin. This was a much smaller component of Square's balance sheet, only about 1% of total assets. It also makes a lot more sense for Square, given that they deal with Bitcoin as a primary business model. However, the amount of the purchase is not what matters here. It's the fact that they are doing it and the rationale that they used. According to Square's CFO, quote, "We believe that Bitcoin has the potential to be a more ubiquitous currency in the future." So, they think that Bitcoin is going to be used more like an actual currency in the future. This is, of course, not too surprising given the general corporate strategy of Square and Jack Dorsey's highly optimistic view about the potential of Bitcoin. Of course, if you read Square's white paper on the purchase, you'll get a bit more colour on their thesis. They also view the current global macroeconomic uncertainty as one of the main reasons to hold a safe haven asset like Bitcoin. So, unlike MicroStrategy, this was purchased more as a long-term investment than as a treasury asset they would like to use in their daily business. In their books, they are accounting for it as other non-current assets. This is just speculation on my part, but I am of the view that Square was just testing the waters. They are a company that is long-term bullish on Bitcoin with a founder who is known to be a Bitcoin bull. It would only make logical sense for them to pick up some more sats, so watch this space. Now, these are just two high-profile cases of companies buying Bitcoin. The impact of the actual execution of these purchases on the price of Bitcoin was relatively mild. In fact, so liquid are the Bitcoin markets that you would probably not have even known that a large buyer was accumulating almost $500 million in Bitcoin over the period. According to the CEO of MicroStrategy, they bought their first tranche over a 74-hour period, making over 88,000 transactions for 0.19 Bitcoin each every 3 seconds. Pretty mind-blowing if you ask me. This is what is termed a time-weighted average price, TWAP, strategy. Square used a similar strategy and they were able to pick up over 4,700 Bitcoin in the span of 24 hours, all with relatively no impact on the price. This is in and of itself an amazing fact. It shows just how deep and liquid the Bitcoin markets are. It further demonstrates just how easy it could be for a large buyer to scoop up hundreds of millions of the stuff in a secretive way without spooking the market. Of course, once these firms disclosed this news to the market, it did breathe life into the bullish narrative. This is because of the broader implications this could have on the relationship between large corporates and Bitcoin. Allow me to explain. When it comes to the adoption of any sort of technology, you usually have a host of roadblocks as an early adopter. For example, think about how hard it was to buy Bitcoin in the early days. There were very few exchanges that you could use. Those that were available were super dodgy and located offshore. No one really accepted Bitcoin for anything, and the prevailing view from the market was that Bitcoin was used by online drug dealers. Fast forward to today, and you have a vastly different view of Bitcoin. It's viewed as a serious asset class, and billions in institutional capital have been invested in the asset. This is not just because perceptions have changed, but also because the industry has evolved in order to provide easy access to it. From exchanges to custody services and OTC dealers. These services have helped bring Bitcoin to a mass audience and beyond. So, what does this have to do with corporates? Well, I think that these moves by the likes of Microstrategy and Square could lay the groundwork for similar corporates in the future. They are the proverbial early adopters in the corporate space. Companies like MicroStrategy have now created a simple precedent that other companies can easily emulate should they want to invest a part of their balance sheet into Bitcoin. Saylor stated that in order to sign off on the Bitcoin purchase, they had to jump through a significant amount of, quote, legal, custodial, and security issues that stood in the way of publicly traded companies getting into crypto. It took them about 6 months to approve and complete their deployment into Bitcoin. However, they have shown that it can be done. They've essentially normalized the process of US corporates getting involved in cryptocurrency. The process is likely to get that much easier as the pioneers have already laid the groundwork. And this is very important for the long-term value of Bitcoin. Allow me to explain. Currently, US corporates are sitting on some record stockpiles of cash. Take a look at this graph. It shows the cash ratio for US corporates. This, the total amount of cash and cash equivalents as a portion of total assets. As you can see, in Q2 of this year, we were sitting at record levels for the ratios. Cash holdings among non-financial S&P 500 companies rose by $90 billion to a record $1.89 trillion in the second quarter. It's no doubt quite clear that these companies are hoarding cash. But, make no mistake, companies are just as concerned about inflation devaluing their balance sheet as you or I am about it devaluing our bank accounts. But these companies do of course face an uncomfortable question: where to deploy it? Traditionally, they could focus investing it in future business. The problem with this is that the future is more uncertain now than it has ever been. I don't need to remind you that we have a teeny tiny problem on our hands, and it seems as if this could be with us for at least a year or two. Then of course we have the extreme geopolitical uncertainty in the world. The US is going through one of the most contentious elections ever, and countries around the world are raising the trade barriers. So, they're perhaps unlikely to want to invest in that new business line or venture at the moment. They're not likely to want to make any large acquisitions until there's more clarity about the future. They can keep that in treasuries, but the rates on those are near zero. It's almost as bad as holding cash, and we know just why that is a bad idea. But where can these poor cash flush companies invest their billions? Well, I'm sure that there were at least a few of them that raised their eyebrows at the announcement by MicroStrategy. After learning more about the process that was involved in the purchase, some may actually have been taking notes. Heck, they didn't even have to take notes. The MicroStrategy CEO compiled a comprehensive list of resources and disclosures that people may need in the event that they wanted to emulate their moves. This is also linked to below, by the way. And something else that I think worth pointing out is the positive PR this had for MicroStrategy. By making what many considered a bold move into the crypto markets, the company got a slew of free coverage. In fact, so positive was the move perceived that the stock rallied immediately post the announcement. It has continued to climb as more disclosure and further purchases went ahead. In total, the stock is up by over 30% since it was first announced back in August. But let's put the PR benefits aside for now. I want to analyze the fundamental demand there could be for Bitcoin in the corporate portfolio. So let's assume that there are indeed a large number of corporates that would want to diversify some of their cash holdings into Bitcoin. What could that look like? Firstly, no one expects any company to just YOLO into Bitcoin with 90% of their balance sheet. MicroStrategy had a very convincing and well thought out investment thesis. S&P 500 corporates would probably want to ease into it with a small allocation to start off with. I think it would be safe to assume that they would not invest more than 10% of their cash and equivalents into Bitcoin. Heck, let's be even more conservative than that. Let's say at a max 5%. As mentioned before, corporates on the S&P 500 have about $1.8 trillion in cash on hand. 5% of all that cash is $94 billion. That's almost half of the entire market cap of Bitcoin. I obviously don't need to tell you the impact this could have on market demand for Bitcoin. Yes, I know that not all of these companies are likely to invest 5%. Some may do more, some may do none. But it's just a rough idea of how much they could look to invest in Bitcoin. But this is just a drop in that fiat ocean out there. And this is just the S&P 500. Let's not forget that there are thousands of other publicly listed companies that are not part of the S&P 500. Or what about all those private companies? There's no reason as to why they could not consider picking up some Bitcoin too. Heck, it's probably a lot easier for a private corporation to add Bitcoin to their balance sheet than a publicly listed company with multiple shareholder groups. But wait, there's more. So far, I've only been talking about those companies that are based in the US. You have an entire world out there, and there is no reason that other large multinationals may not want to hold Bitcoin too. Some of these other global companies may indeed find the regulatory rigmarole as less stringent in their local jurisdictions. So they may have to jump through less hoops to pick up those sats. So this just gives you an idea of why I found the news to be so bullish. It's a harbinger of things to come. A pot of digital gold at the end of that fiat rainbow. Okay, this is all well and good, but what could it mean for price? It is, after all, the thing that is most on our minds. Well, of course, you don't need to be a rocket scientist to know that this is incredibly positive for the price of Bitcoin. It's a scarce asset with a limited supply and a constantly decreasing inflation rate. There could be massive demand to buy it from all of these institutions. Even if they were to use the same execution method as MicroStrategy, larger purchases could no doubt move the markets. Then you also have to consider the supply side of the equation. Based on current block rewards of 6.25 Bitcoin, the inflation rate is estimated at about 1.8% per annum. If demand was to outstrip this supply on a sustained basis, it's price positive. You should also note that these corporates that are picking up Bitcoin are likely to hold on to it longer than your average crypto investment fund or asset manager. They're less likely to want to trade it on the day-to-day, and hence the hodl power of these guys is much more sustained than those who actively manage crypto portfolios. If you take a read of the disclosures of both MicroStrategy and Square, it's pretty certain that these guys are not likely to sell out of their Bitcoin anytime soon. Sure, MicroStrategy may use some of it in its day-to-day treasury strategy, but that would be more operational use than strategic allocation. So, we have increasing demand to hodl an asset that has a scarce supply. Economics 101 dictates a price increase. But there is one more thing you may want to consider here. Let's not forget about that PR buzz I was talking about earlier. Not only does this benefit the company itself, but is also amazing for general Bitcoin awareness. For example, Bitcoin rallied immediately after the announcement by both MicroStrategy and Square. This, of course, makes sense. If a retail investor reads about a large company that allocates 90% of their short-term cash into Bitcoin, it gives them more confidence to hodl it. Hence, you don't only have that potential demand that could come from those corporations, but also from traders like you and me. So, yes, add that to your hopium potion. Time to start wrapping this up, team. As you can see, I was really quite encouraged by the news. Yes, it's easy to get carried away with things like this, but I really do feel as if the ground is shifting. I mean, even just 2 years ago, would you have thought that a listed US company would have allocated over 90% of their cash portfolio into Bitcoin? Hell, even the MicroStrategy CEO himself wrote Bitcoin off back in 2013. He said that, quote, Bitcoin's days are numbered. It's pretty amazing that someone can go from being such a Bitcoin bear to investing over $500 million into it. But That's the reality of today. He did the in-depth research and came to the conclusion that so many of us have in the past. Holding an asset that's being inflated away is suboptimal for long-term value preservation. And the move by Square shows that it's not just them. Companies are pretty quickly taking notice of the lack of solid alternatives to the cash and treasuries that they have on their balance sheets. As I've shown, even a minor allocation of their cash balances to Bitcoin will easily outstrip the available supply. And I should also point out that all this analysis was purely based on non-financial corporates adopting Bitcoin. We all know the oceans of capital that lie in wait from the financial institutions: hedge funds, mutual funds, pension funds, high net worth individuals. Some of these institutional money men have been ploughing Bitcoin into their portfolios faster than you can say Satoshi. So yes, I am bullish AF. And that's it, ladies and gents, my take on the recent corporate moves into Bitcoin. Now, of course, I am but one man with my view. I am keen to hear yours. What do you folks think? What other companies are likely to stack some sats? Hit me up in the comments. Also, while you're down there, you may want to check out my deals page. This includes some of the best deals and promos that I could get just for you guys. So, be sure to check that out while they are still available. Finally, thanks so much for watching. You people rock. If you got value from this vid, then let it be known. Turn that like button blue and don't forget to subscribe. My video pipeline is currently hotter than Bitcoin.